All right, everybody, welcome to our next stop on the Note Nation Top 40 Road Tour as we roll into the music city of Nashville, Tennessee. Honored to have all of you guys here tonight. We'll have a variety of local and national investors that are going to be joining us watching this. If you're live, great. Make sure to comment, whether it's on Facebook or Zoom, or you're watching us on the replay as well. Feel free to comment. We're glad to answer your questions about specific things. You can always check out the full tour at notenationtop40.com. We're going to be discussing the statistics and the numbers, what's going on in the Nashville market, in the residential and the commercial space. We'll talk about future opportunities and where to look for those deals, and obviously how to get started. We all know it's the second half is kind of an interesting time frame with this. The future holds for us for the next 90 to 120 days. So who is Scott Carson, guys? That is me. I'm honored to be on here tonight with you guys and here to answer your questions as we discuss different things. But I've been an active real estate investor since 2002. I'm the CEO of WeCloseNotes.com. That's my main website where you can check it out there. We've been buying and selling distressed debt for over a decade. I'm an active real estate investor for almost 20 years. In this last decade, I've purchased over $500 million in debt from my own portfolio. I've been teaching real estate investors since 2004 how to tap into distressed assets. I am the host of the national syndicated Note Closer Show podcast that you can listen to anywhere that podcasts are available. You can always check out our replays also at WeCloseNotes.tv. And I invest all across the country, even though Austin, Texas is home. And Austin is a very similar market to Nashville, although I've spent quite a bit of time up in Nashville as well. Very similar numbers, what's going on. And what do you say we dive in? So let's talk about our mission at We Close Notes is to help investors to accomplish their goals and dreams, increase their wealth through debt investing. We've been doing this for a long time and helped a lot of investors out of, or actually a lot of borrowers out of bad situations and help put a lot of investors into good ones. Why am I doing this? I'm doing this because I do love to help investors. I am very passionate about to help people solve problems, whether they're investors or people that are facing issues. I do believe that this is an opportunity right now with what's going on and what we're going to see in the next 12 to 24 months, just like it was over a decade ago, a big opportunity for people. I was once a distressed borrower, and so I empathize with what's going on with borrowers out there. People have lost their jobs, been laid off, sick, businesses have shut down. They're facing foreclosure. I've all been there, so I have a passion for helping people out because of that. And I'll tell you this right now, there's nothing greater than helping someone overcome an obstacle or achieve a goal or dream that they thought was once impossible. Now, many people thought the dream of home ownership might have been impossible. They bought houses. Now that dream has turned into a nightmare in forbearance agreements and dragging out and facing foreclosures or evictions and things like that. So I encourage you to hang around to the very end because we do have a big goal in mind for what we're trying to accomplish. We wanted to try to help 1,000 investors in the next 12 months tap into the distressed debt space and help make America great again, one defaulted borrower at a time. But anyway, where are the opportunities, everybody? Opportunities are literally everywhere. That's the way we look at life. That's the way we look at things going on in the market right now because of, it's definitely deals are just about every stinking where out there, whether it's self-storage, it's apartments, single-family homes, mobile home parks, office buildings, even hotel, motel. There's a variety of opportunities everywhere. And the beautiful thing about what's going on in this market is the fact that the banks and what's going on, it doesn't matter how old you are, what color skin you are, how seasoned you are, how experienced you are, whether you're a successful business owner or failed business owner, now's an opportunity and time for you to take advantage of what's going on here. If you really want to act and make the next 2 years, 3 years life-changing for your families, now's the time to do it. So whatever your goal is, everybody, whether it's to retire on the beach drinking pina coladas and margaritas, whether it's, wanting to have your spouse retire or spend more time with them, maybe it's to put your kids through college, maybe it's to, retire your family, your mom, your dad, as they continue to work. Maybe it's to travel more with your friends or your family. Maybe it's just to upgrade your own house or your own investments. There's a whole variety of things, but we know one thing is common across us. It takes capital. It takes cash to do this. And a lot of people get so limited, like, well, I can't find deals. My deal's too competitive. My market, Nashville's way overpriced and just too many investors there. I just don't have the money to compete. I'm going to tell you right now, ladies and gentlemen, you do have the opportunity to compete. You do have a lot of great things out there that you can do to make things happen today, tomorrow, and into the near future out there. So what do you say we dive into and share a little bit about what's going on? So what do the national numbers say right now Well, I'll tell you this, national numbers say some things out there. We're at 11.1% unemployment rate as of June. We probably see that number go up for July, just because of it'll shrink in some areas and increase in other areas. There's over 50 million people have filed for unemployment since this thing started. Yeah, 50 million, crazy. They expect 52% of small businesses are expected to fail over the next few months, if not a larger percentage because of the struggles. There's been a record amount of bankruptcy files too in business. Before the pandemic, 1 out of 10 homeowners were already struggling to stay current. That's a fact. Literally 1 out of 10 borrowers is already 30 days behind in their mortgage. They were in default, but they were already behind, okay? Now we see a current delinquency rate across the country when it comes to the mortgage rates of being a default rate of basically 1 out of every 12 borrowers, 7.76%. That's what the most recent numbers state. I think the numbers will be updated here any day. And I think that number is definitely going to go up, all right? Currently, there's 4.1 million Americans currently in default that are 90 days or greater behind on their mortgage. And if you look at the comparison models of what's going on now versus what happened a decade ago, it took us 18 months in the Great Recession to hit 1.6 million defaults. Now we're 6 months basically into just under 6 months, and we are already 2.5 times that number. Yeah, it's going to get worse out there. I mean, literally the banks are bracing for us to see somewhere around 15 million mortgage defaults out there. It sounds a lot like what happened at the peak in 2010 where we had 15 million mortgages, borrowers that were underwater. It was an ugly time. Now, if you look at how Tennessee compares to the rest of the country, what's great is bank rate, which takes a look at the different savings accounts and checking accounts and takes a look at all the other things. That's come up with a housing hardship index and ranked all the states out there. Now, Tennessee is actually doing pretty good. It's not quite the highest, not quite the lowest. I mean, Tennessee ranks, unemployment rate is 9.7, so it's a little less than the national average. That's across the entire state. We'll talk about specific numbers in Nashville here shortly. Delinquency across the country is less than the national average at 7.43. Not much of a difference, but still, it's less than what the national average is. So that puts Nashville almost smack dab in the middle at 24%, number 24 nationally, as far as housing hardship when it comes to unemployment and defaults across the country. That's not bad. Kind of right there in the middle. Not the best, not the worst by any means, and that's okay. Now, let's talk about the unemployment rates of Nashville. Right now, as of June's numbers, it's set at 10.2%. Now, the nation 11.2, Nashville's at 10.2, Davidson County's 12.1 on average. Rutherford around at 10.6, Sumner County 9.3, Williamson County at 6.7. So you can see kind of varies all around Nashville. Now, if you look at the biggest states, I'm sorry, the biggest states, the markets that have, the cities that actually have high unemployment rates, you can see Columbia at 14%, La Vernia 12.9, Nashville's at 12.1, Smyrna's at 11.9. You can see this. This one 12.1 shows you what it was before June, was May's numbers. My apology on that, but you can see kind of it dropped down from May to June, which is nice. But you can see it's kind of in the middle there. Nashville's not the worst, but not the best also when you look at Tennessee. Now, looking at foreclosures in Tennessee, Nashville has basically one in every 14,000 homes, which is phenomenal. One of the lower foreclosure rates in the country. Basically, the top 2 zip codes for foreclosures is 37216 for one in every 12,000 homes, and 37207 for one every 15,500. All right, so yeah, got one bad spot there and a whole lot of the rest out there, but even that bad spot's not that bad. So if you look into the auctions of current bank owns, you see about 50% of what's hitting the markets. Auctions or bank-owned homes. You can see that the numbers dropped dramatically in March as they kind of ceased foreclosures, evictions nationally, starting to climb a little bit up back there for you. You can see the numbers again, bottomed out their total foreclosures across the area. Now, Tennessee was one of those states where the evictions have resumed. The state didn't really stop everything. They did suspend all person hearings, including eviction hearings, through April 30th. And then basically, as of June 1st, basically evictions and foreclosures have resumed. Now, obviously, that's different than when you look at the government loans, because the president had an executive order there basically that for all your FHA, VA, federal home loans, that they've extended it through April if you've got a government-backed loan for the most part. But if you're not government-backed loan, investor loan, Commercial loan, hey, guess what? It's business as normal for you out there. Now, July's numbers, this isn't for August yet, we still don't know, but July through the middle of July, Tennessee had already started to kind of get back to 12% of what it was before the pandemic, okay? Started to get back to a 12% level. So you're going to see some stuff happening out there. Now, with forecasting and economic tsunami, as foreclosures rise, mortgages sink underwater as people default, don't really see a lot of value dropping in the Nashville market. A lot of demand there. But there are things that are defaulting. You have to keep an eye out there. No matter what the situation, no matter how great everybody's saying the market is, there are still problem children everywhere. Still people having issues. Layoffs across the board. So when you look at the type of loans that are defaulting, it's no surprise that it's really your first-time home buyer, your FHA loans, that are having the most amount of difficulty at a 9.69% default average. This is your first-time home buyer. It's coming in with 3.5% down. Not really looking at credit scores. And a lot of the banks out there, especially the bigger banks, we'll talk about this in a second, we're donating the down payment and even willing to donate not only down payment, but also up to 10 grand towards closing costs. That was one of Bank of America's big marketing tactics. Hey, we'll donate the 3.5 and we'll give you 10 grand towards closing costs. Ouch. When you look at the traditional conventional loans at 3.16% default rate, that's the lowest, but you still see tick ups from VAs and all the other loan types. So considering that the default rate was roughly about 2.5 back in January, February, you can see the dramatic swing with your first-time home buyers that are often your 200 grand or less homes. That's your service industry. That's a lot of your restaurant bartenders, other people out there. I mean, they're not making the greatest amount of money, but they're also the ones that are most impacted by layoffs and things being closed. Now, we know forbearance agreements have been on the rise. They're increasing on a regular basis. Currently, they sit at somewhere around 4.6 million borrowers are in a forbearance agreement. That number drops and increases nationally on a week-by-week basis. Experts say, though, that there's probably another 4 million borrowers out there that should be in a forbearance agreement that have not contacted their bank, have not contacted their lender to talk about that. So is this good news or bad news for you guys? Well, Tennessee has a lower default rate versus the national average. That's a boost. It's also got a lower unemployment rate. Shorter foreclosure time frames. If you're an investor in Tennessee, that's not bad. In Tennessee, a non-judicial state to foreclose, you can usually close in roughly about 90 days for traditional loans. FHA is going to take you about 420 days, which is really one of the shorter time frames when it comes to foreclosing on an FHA loan. Now, there is still this backlog of forbearance agreements, so it's going to be a while. And economists and bankers all across the country are saying that it's probably going to be a good while before REOs hit the market. Foreclosures that really hit a huge amount, 12 to 18 months before we see this huge spike. Why 12 to 18 months? I'll tell you right now, when everything hit the fan, the banks went to automatic forbearance agreements for a lot of places. That's 6 months. The government-backed loans are willing to go another 6 months to 12 months before they look at the foreclosure process. So that's literally giving banks 6 to 12 months to evaluate their portfolio and realize who's the good guys and who's the bad guys, who's on the naughty or who's on the nice list. And who's on the naughty list, they're going to look to move those. Those that are on the nice, they're going to look to keep, okay? So what about commercial debt? Yeah, this is where the biggest impact is going to hit first and foremost. We've seen rents for sale signs, for lease signs pop up, evictions, businesses are failing, companies are filing bankruptcy. They expect 1 out of every 2 malls to fail already, even though they were already struggling. I've been saying for a while that commercial real estate has been on a boom. Nashville has been kind of the exception to that. Seen a lot of great stuff growing in there, but you have some, we'll talk about that in a second. We'll have some dissent among some people in Nashville. Now, looking across the country, hotels, motels have been the hardest hit with your lodging, your retail's obviously no surprise there. Restaurants have been hit also hard as well out there for you. And when you look at some of the bigger metropolitan areas, looking at the private label CMBS guys, so commercial mortgage-backed securities that finance a lot of stuff, you know, Nashville's not in the top 15, but you do have to watch out for it because it does have some stuff on there. Atlanta's probably the closest to it at $700 million in CMBS. Chicago, $2 billion. You look at Washington, $1 billion. Houston, $1 billion. Dallas, roughly $920 million. It gives you an idea. It's probably somewhere in that $500 million to $500 million to $1 billion amount. Now, some of the real estate experts are saying, hey, we went straight from overbuilding to a depression. Okay, you're going to see some stuff drag on the market longer. I've already been in touch with friends that are building in Nashville. coming up with new like condos, and they're like, we're breaking ground in the middle of COVID, or we've got some stuff that are coming on the market. I still think some of that will sell, but you better expect to be able to move it, and better be very convincing in your sales price, because you overbuilt and now you're in a depression. That means demand is high. Sorry, demand is low and supply is high. That means you're going to have to drop your prices down to hit. And you look at the hotel market, which has been the biggest hit in Nashville. Nashville staring down 1.4 billion in likely loan defaults. Yeah, that's not good. That's a pretty big chunk in the hotel space and other areas out there. So keep that in mind. Hey, if you ever want to buy a hotel, it might make sense to convert it to residential, turn it to an apartment complex. So let's look at some of the defaulted numbers across the country. 1 out of every 4 hotels are in default. That's serious. Right? In your higher traveled cities, that's a big thing. The Grand Ole Opry and the whole everything out there is in default. It's part of a bigger pool that they're not talking about. 1 in 5 retail loans is in default. 20% of every retail spots out there are definitely may not come back. They're expecting us to see a 15% vacancy rate for retail and restaurant space. Office vacancy is expected to increase to 19 to 20% increase by the end of the year. And you're going to see rents are expected to fall by at least 10.5% by year end, if not to 15. And that number continue to increase into 2021. So that's the one thing about Nashville. The office spaces are taking a hit. The retail spaces are taking a hit. The hotels are taking a space. That's the big thing you're seeing out there. Now, who's financed a lot of this? Because that's where I look to see who's financed most of the stuff. And a lot of this, if you look at the previous 10 years ago, the CMBS guys financed roughly 2/3, 66, 70% of what was in distress. And they were trading that amongst themselves. But right now, what's happened over the last couple of years is the banks have financed roughly over half of the delinquent stuff. Okay. They have financed 53% of the distressed commercial space, and it's going to be a huge, huge tsunami that's going to hit sooner because they're not getting bailed out. Okay. Now, a bank, when they're financing commercial properties, they're not financing 95% like in a residential. They're financing 60 to 70% of it, somewhere in there, depending on the asset class. Well, if you're a borrower, you have a commercial loan with a bank and your tenants go late, your tenants stop paying, and your rent are reduced dramatically, that means your income is reduced dramatically, and then your cap rate, the value of the property, depreciates. It falls. And if you're at a 70% loan with a bank and your value drops, let's just say your rents drop 20%, your value may drop another 14%. So you now, or the LTV of the bank, they may be at 80, 85% now. Now the bank doesn't want to be at that high a loan balance, so they're going to ask the borrower to bring money to the table to pay down that loan. And if the borrower, property owners don't have that, guess what? The bank is going to look to sell, going to look to foreclose. I mean, they're going to try to work out with the borrowers in some sort of fashion, but they can't keep holding the tab. All right. Now, what's the play to this? Well, the play is pretty easy to come and step in with cash, buy those loans, try to get creative with the tenant, the borrower, or take over the property and work with the tenants that are in place, or reposition the property in a variety of ways. Now, reposition the property, there'll be plenty of that out there. Banks are expected to lose somewhere around $48 billion on commercial real estate loans. That was of July. Bank of America announced just a few weeks ago that they expect to lose roughly Bank of America, Wells Fargo are all taking a big thing, but Bank of America's piece of the pie is $5.1 billion is what they're setting aside to cover those sour loans. Now, this just came out recently with DS News talking about how the 4 bigger banks, JP Morgan Chase, Bank of America, Citigroup, and Wells Fargo, disclosed deferral details within their second quarter filings, okay? Here's the thing. They've set aside more than $32 billion for loan losses in the second quarter, close to a record, signaling that relief programs may not be enough to stave off a flood of bad debt. $32 billion between the 4 of them, okay? Now, if you take a look at a little further on that, you can see how it jumped up there. Majority of Wells Fargo's combined $35 billion of first and second mortgage, representing 12 and 10% of each loan type. 12% of their first liens, 10% of their second liens. JP Morgan has about 9% of their residential real estate portfolio subject to payment referrals, representing nearly 3/4 of the total $28.3 billion of consumer loans in deferral. Wells Fargo reported $44.2 billion of consumer loans, It modified 38.2 billion commercial loans without disclosing the amount remaining in deferral by June 30th. And of course, Citigroup modified 20 billion loans as well, and deferred payments on 7.7 billion in commercial loans and 28.5 billion in consumer and small business debt. Red flags, everybody. A lot of debt out there that just, if people aren't going back to work, it's going to be different. So where are the opportunities? Is it in the foreclosures or the REO market? Hell no. You're going to wait 12 to 24 months to see stuff that makes sense off of that. Is it in the fix and flip side of things? No, because it's going to take a while for properties to shake loose that makes sense. And then even the banks and the mezzanine lenders have really slowed down on offering up lending programs to either to finance those things on the purchase side or to get refinanced out of the backside. Okay, rentals, I don't want to be in the rental market if people aren't paying or are laid off. It's not a good thing. I don't want to have to evict people. Now, the real opportunity lies in the debt game. I mean, if you look at the rental, not just long-term rental, but short-term rental, oh my gosh, that's a bloodbath right now. The debt game is where the money is at, where you're going to see Wall Street stepping in, and investors like you and me have a big opportunity to tap into that huge piece of the pie and break off a piece of the crust, okay? Now, you're going to see residential notes in the fourth quarter more so, because why? That first 6-month period, the banks have had time to evaluate, like we talked about, the naughty or the nice list. If they're nice, they've been paying. They're on time. They're kind of getting off their forbearance agreements. If they're naughty, they may be looking to extend it for another 6 months. Okay? That's where the opportunity is. You can see a lot of that stuff being sold relatively cheap in Nashville, in Tennessee, and other states out there as well. As banks, as lenders have stuff all across the country, not just in Nashville. Now, the commercial debt side, the commercial notes, we're already starting to see some opportunities come across our desk. Some of my buddies have said that they've seen more deals in the last 2 months than they've seen in the last 2 years. And a lot of the websites that we track, things we see, we've seen increased numbers of commercial notes popping up for sale. Now, you got to keep that in mind too. Where's the opportunity line? Well, the opportunity line isn't the big stuff. It's that smaller commercial stuff, that sub $5 million value, specifically that $2.5 million in value or less market. Wall Street doesn't want to waste time with it. CMBS doesn't waste time with it. But the banks have loved the stuff and financing it, riding that wave up, and then we're financing this stuff. And this leads to a lot of opportunities for us to step in, pick up this debt, and then work it out with the borrowers or work it out with the debt. I mean, if they're 6 months behind or greater, and you step in and you bought that loan at 50 cents a dollar, if they're still operating, you can adjust your numbers and listen, we'll just extend at least 6 months. We'll just extend the mortgage 6 more months on the back end. You're not responsible for the origination, so it gives you a lot of flexibility on the workout side. And you got to be creative sometimes. You got to be creative like the hoteliers are doing. They're taking their new hotels and converting them to apartments for sale. Our buddy Garrison Gilbert is doing this in a couple places, looking for empty, vacant hotels or hotels that are shut down and converting them into residential apartment buildings. They're already basically halfway there. You could also take a look at office space has been hit hard. We all know that. We've got a buddy here in Denver who's got a 110-unit office space. Opened it up relatively first of the year. He's like, yeah, this isn't going to work. And so what he did, he got smart. He converted it to self-storage, which was needed downtown where he's at. And he's got that thing up and running and doing very well. So now their bank's in trouble. I think we all know that besides the big four. Okay. No doubt those guys have bit off a lot more than they can chew. But Tennessee has its fair share of other banks in trouble too. Now, Bauer Financial is a service that we use to take a look at banks' quarterly reports. On a spreadsheet level, it tells us who the 5-star banks all the way down to 0-star banks. 0 star is not good. That's how much in default every bank is. And there's over 2,000 on our list of banks that we pull that have at least 5 branches or greater. Anything below 5 branches, we don't spend our time with. Not saying they don't have something, just that we would rather deal in bigger pools or better deals because they've got a bulk amount versus 1 or 2 assets. Now, out of the 2,000 plus banks in the list, if I take a look at those that are just with their home offices or they claim Tennessee home, there are 72 banks in that list that claim Tennessee home. We know there's thousands of banks that lend in Tennessee, okay? Thousands of banks that lend in Tennessee. It's a nice state to lend in. 72 banks. We take a look at just their snapshot, okay? Now, combined out of the 72 banks, they've got about $618 million in 90-plus defaults on mortgages, and they've got an additional $405 million in 30 to 89-day defaults from June. Now, most of that stuff is probably rolled into 90-day defaults. So you're talking about $1 billion approximately in distressed debt across the board. That's a 6.15% default average per bank for the most part. All right. That's starting getting up there. When you get higher default rates, more than 3 or 4, they start worrying about some things. Out of that 618 million currently in 90, there's 183 million of it in single family loans. So roughly about a third of it in single family. The rest of it's in commercial loans. And you look at First Horizon Bank, it's one of the biggest contributors. They have 212 million total in 90-day defaults in their portfolio. And Pinnacle Bank has 73 million in single family defaults. Roughly, First Horizon is roughly about 37% of their whole portfolio. Pinnacle Bank is roughly about 27%, if I remember correctly, that have bad of the portfolio debt. So anytime a bank has a big portion like that, yes, the Fed is allowing them to kind of carry some of these rough balances for a while, but they can't do it forever. The government can't keep printing money, and the government can't come in and bail all these guys out on a regular basis. They can kick the can down the road 6 months or 12 months, but that's just for government-backed loans. If you're a second investor or your investor loan or second home, those things are not being forbeared on by the government for the most part. And at some point, those are going to come due. You got to pay the piper, everybody. So why do you want to buy distressed debt? Well, you can buy this debt now or in the near future and start working these deals well before the traditional public ever sees it. Your regular investors at the foreclosure auctions will never see probably 80, 90% of what's going on right now, okay? You can purchase this debt at significant discounts, depending on the location, the foreclosure time frame, the values, the condition, the asset class. I mean, we are seeing hotel loans already going in below 25 cents on the dollar. Yeah. You can purchase the debt, control the asset for huge discounts at 30 to 70% off. That gives you so much flexibility to work one of the strategies, a loan reinstatement, a modification, short sale, whatever. There's a lot of money made in keeping the borrowers in the property. Now, if you need to, you can take over the note and turn it into a cash flowing performing note if you need to, become the bank, or take over the property, let the borrower walk, and then do what you want with it. Convert it, pivot the asset, take it over in receivership if they file bankruptcy, and keep the tenants in place there if you need to. Hey, if you're buying stuff at 50 cents on the dollar, plenty of motivation to hold on to it for 12 or 24 months is what they're saying. It's going to take a while to get clear to this. It may take 4 years before the commercial market comes back to where it was, but that's okay if you're buying at the right price. Now, some of the other advantages, note investing, ladies and gentlemen, is this. First and foremost, we don't send out direct mail postcards. This is one of the biggest things that stops people from doing and investing is the cost to market. In a traditional real estate, people are sending out postcards, yellow letters, bandit signs. Look, there's nothing wrong with that, but most of you just don't have a huge budget for marketing. Most of you guys, especially if you've been laid off or you're struggling right now, you don't have that extra money. You don't need that cost with what we're doing in the note space. If you got an email address and a LinkedIn profile, a free LinkedIn profile, you can pick up the phone on your cell phone and dial for dollars. Guess what? You can tap into this market. One bank can lead to regular deal flow for you. That's the biggest problem. I see all these other investors out there mailing out 5,000 postcards to get a 1 to 4% response rate for like one property on that lead. And they got to do the whole thing all over again. Well, they're waiting 6 months to 12 months before the foreclosure lists come out when we're already starting to see this stuff now. And I don't have to mail postcards. If I make 50 phone calls, I'll talk to probably 14 people and get a hold of 4 lists that I can get sent to me on a monthly and quarterly basis. Makes sense. I can pick the best deals for my portfolio if I want, or I can buy in bulk and get even better pricing if I can do that. You know, there is a ton of residential and commercial properties. So often banks will have both that I can take a look at, depending on what my appetite is. And guys, I don't have all the money myself. 99% of what we have closed has been using other people's money to fund our purchases. And that's the beautiful thing. The bank doesn't care what your credit score is. They don't care where the money's coming from. They just want a wire to come in and then somebody to take over the asset that isn't going to embarrass them. It has a team in place to do it. And the team in place is not difficult to put together, guys and gals. And you got to realize, we saw 15 million homeowners underwater on the residential side and several million commercial properties a decade ago. You're going to see pretty close to the same thing. And the question I ask you is, what do you want to do? I don't want to go out and drive for dollars. I don't want to knock out and deal with borrowers one at a time. I want to deal with a bank and make a decision based on that. And then I can hand the loan off to my servicing company who can call the borrowers and work that out. It's a much smarter, more efficient way of doing business. Now, some people ask me, well, Scott, I don't know any investors in Nashville. I don't know any investors where I'm located. Well, there are thousands and thousands and thousands of investors out there There's over $9 trillion in retirement funds sitting out there waiting to get put to work. In Nashville alone here, we run these numbers. This is just for Nashville, not the whole county. The county's got more numbers than this. But the local county in Nashville has 21,000 investors with an IRA account, an individual retirement account. And out of that 21, basically 2/3 of it, 67%, 14,000 people have at least 150 grand or more in their accounts. What? Yeah. 14,000. If I could show you how to tap into that or how to find those lists, is it worth it? Hell yeah, it's worth it. It is so worth it to make things happen. Now, maybe you don't want to raise capital because you're scared. Okay. So then flip the deal, find the deal from the banks and flip the deal to one of 17,000 real estate investors in the area as well. Hello, McFly, anybody home? You don't have to raise a capital if you don't want it. Just take a piece of the action and flip it to somebody else. And there's plenty of investors out there looking for deals out there. And the question I always ask, do you want to be the banker or the borrower? Look, the bank always wins, ladies and gentlemen. And when you look at the fact that more Americans are sitting on more savings than they ever have in a long, long freaking time, why not? Take that money, it's not paying them anything, and start giving them above average returns, 3, 4, 5, 6% on their money, because they're not getting anywhere else. That's why the bank always wins. They get money in, cheap interest rates, they lend it out at 10, 12, 18% to borrowers, credit cards, mortgages. That's why the banks are the biggest out there. And you have the opportunity to step into their shoes and take a big juicy bite out of the distressed pie and get a big piece of that crust as big as you want. All right. So how do you tap into the tsunami of deal flow, everybody? Literally, I've been teaching investors about notes since 2010. It's basically all I've focused on for the last 12 years. I've helped 1,000 investors purchase their first non-performing note or the first performing note. We've done residential and commercial notes. We've done it for cash flow, or we've done it for asset growth. Okay, you can buy one-offs or you can buy in bulk. It varies on whatever the bank has. The banks are basically mean at that point, like, just buy something. Okay, and you don't need to have $5 million to tap in this. I've probably had 20 conversations in the last 3 weeks with people like, yeah, I tried to get in 12 years ago, but I didn't have $5 million. I'm like, you don't need $5 million. I didn't need $5 million to tap into this. Okay, I've done trades 25,000 up to 5 million. We put some money together. But the thing I'm trying to get at, everybody, 25 grand. There's plenty of people out there could pick up an asset at 50 cents on the dollar, $50,000, $100,000 house that you can pick up and turn it from a non-performing note into a performing asset, or foreclose if they won't work with you. You don't need credit. The bank doesn't give a rat's ass whether you've got a 400 or an 800 FICO score. It means no difference to them. They don't care if you've got $1 million or you're in a forbearance agreement on your own house. If you've got money from other people and can make this happen, this is how you do it. And it's very, very simple. If you're coachable and knowing what to say, what to send, how to get on the phone, how to approach them online via LinkedIn, you can tap into thousands and thousands of deals from the comfort of your own home, office, wherever you're at. Okay? Maybe you don't live in Nashville and you want to invest in Nashville. Great. Maybe you live in Nashville but don't want to invest in Nashville and want to invest somewhere else. Great. You can do it, everybody. Whatever your focus is, as we talked about the different asset classes, single families, apartments, hotels, office, self-storage, mobile home parks. There are deals in all asset classes, some bigger than others. And you can really, truly create win-win stories and scenarios, not only for you, but for the borrowers that have been in their houses for a long time, or the developer who is overbuilt a property or is on the tail end of getting some stuff off their books. They have to get off their books, and the bank is motivated to make a deal happen. Or maybe you want to take something down for cash flow, like an apartment complex of some sort. You can do that, everybody. You can do it, all right? You can do it whatever your focus is, and I mean that. And you can do it big or small. You can do it, start off small like Gene and Laura and Keith all started off with doing onesie, twosie deals here, which is great. Nothing wrong with that. Gene was doing whatever he could afford in his market. Laura was like many real estate investors out there, going to real estate clubs and trying to wholesale and light rehab subject twos, whatever she could do to try to, fit a round peg in a square hole. Keith has been doing it in real estate for a while, building water treatment plants and working with cities. I think he was the mayor of a small town. But the thing is that they all have in common is they learned how to tap into the note business from me. We spent time with all of them, and they've all done amazing things. Gene sent me a text message the other day stating, hey, he's closed on over 135 assets, over 13 million in private capital when he was scared to death to raise capital on the front end side. It's a whole different meaning. Laura Blunt closed on two deals in her first 30, 60 days as a student. By the end of the first 18 months, she closed on 15. Fast forward a couple of years now, 2 years later, 3 years later, she's closed on over 100 deals. She's getting ready to close on a trade of 100 deals for basically $4 million in other people's money. Totally life-changing deal flow for her. Keith Collins done an amazing job. As he said to me, he goes, Scott, it's based on your teachings is why we made 7 figures last year. Yeah, we know what we do. We know how to do it, and we do a great job in teaching you how to do it. And all of these guys had experience. You don't have to have experience, though. You'd be a lot like our buddy Raphael. Raphael here's from San Diego, young guy, business owner. He owned a car detailing business. He put together 15 full-time employees, started getting a bit interested in real estate, didn't even own a house. He goes, San Diego's too damn expensive. I rent out here. And we spent time with him in his first 45 days. He closed on 5 deals. 2 he got reperforming at roughly about 20% cash and cash return. The other 2 out of the 3 he's getting ready to sell, double his money. The 5th one he's still working on. But COVID hit him hard. He had to lay his whole staff off. But he's like, Scott, I may not reopen again. And I'm fine with that because the fact is I found something that will pay a lot more money and I don't have to deal with the stress of employees or being an adult babysitter. And he's like one story like many others out there. All these people, hey, experience or no experience. And we've done an amazing job helping people take their businesses to the whole next level out there in a variety of actions, variety of trades. And that's what we're so proud of. And how do they get started? With our classes. What's the first step as a class? Our first step is really our one-day Note Weekend training. This is a one-day class. It's online. You can go to noteweekend.com. Check out the schedule. The schedule is roughly about the same. It's the starting point. Dip your toes in the water and get started learning about note business. And as we say, we have one basically just about once a month, usually the 3rd or 4th Saturday of the week or of the month. And, it's a one-day training, mini workshop. You're not going to learn everything about the note business in one day, let alone a 3-day, but you're going to get a great comprehensive approach to it. As our students, they love this. They call this the Cliff Notes version of note investing. You know those yellow books in college, Cliff Notes, when you go through a store, we don't read the whole book, but you want to get the highlights. Guess what? This will help you with the highlights and help you understand if it is something that you want to dive into or something you don't want to waste on. Because notes is not for everybody. Okay. We live stream the class on Saturday. We restream it on the following that next day on the Sunday. Replays are included. So if you got to step away, they're included. All right. And you get them immediately. Normally it's 97. We drop the price down to 49. We'll run the class usually from 9 a.m. to 5. Sometimes as early as 3 if people are getting it. Or we can go on to 7 o'clock at night as long as questions answered. But we guarantee it's going to be a very full day. We only take a couple breaks, couple 30-minute breaks for my voice because it's me teaching the entire day. Not anybody else. It's me. We got a 20-page manual that goes along with it so you can download and look through it. That includes another 10 hours of bonus training with our vendors. And like I said, guys and gals, we would love for you to be a part of it. We'd love to put 1,000 people through this. So we've got 1,000 people that we can start feeding deals to when they come across our desk. It's like they already are. I got a portfolio, some residential notes from a guy in Wall Street just a couple of days ago. I've got some commercial notes coming in from another guy out of Miami that's stuff all across the country. All right. I was looking at an asset in Memphis and then another asset outside of Nashville. Okay. I was looking at another asset in Knoxville this week, everybody. If you want to learn how to tap into this, you got to get started somewhere. You got to get a foundation. If you're a fix and flipper, you've never been in the note business, I'm sorry. It's a different mindset. And there's some things you got to understand that's different than your fix and flip and wholesale inside. Yes, you can wholesale notes, but there's a different animal in due diligence. And so that's the biggest thing is that most people screw up on. If they don't understand the note business, they can really make some big mistakes. We don't want that. What else are we going to cover? Well, the first part of the day, we cover how and where to find the notes. You walk out with over 2,000 contacts, basically to reach out to, understand what they have in their books that they need to get rid of. We'll talk about how to fund these deals with other people's money. We'll show you how to tap into those 22, 21, 17,000 investors in your local area to tap into that money, tap into that deal flow or that exit flow for, as we like to say. We'll talk about the different exit strategies, how to make money with something that you buy, how to structure the deal, how you can create a win-win scenario, not only for you and the borrower, but also your investors as well. We'll talk about the different vendors that you need because you're not going to be doing this all yourself. I'm sorry. You're not the guy mowing the lawn, fixing it, and doing the open house. Doesn't work that way, no. So you need to have teams. You're going to have realtors, agents all across the country to look at your properties. You're going to have real estate attorneys to help you with their foreclosure. You're going to have servicing companies helping with a borrower outreach. You can't do it all yourself. All right. But they're all paid by the deal. So we'll talk about the vendors aspect. Like I said, there's roughly another 10 hours of video training included that you watch on your own for about the team membership. And we'll also talk about the loan trading platforms that I mentioned a minute ago, places that you can go look at deals right now. You can start evaluating commercial and residential deals. And then we'll cover a lot, much more out there. Some different ways to market. We'll talk about what to say script-wise, what not to say. Lots of great stuff out there for you guys. And that's all for just $49. Okay. Normal one-day classes are usually somewhere between 97 and $150. We made this affordable for everybody. You gotta have some skin in the game. Free has no value out there. And that's not enough value with what we're going to cover. Well, you know what? Let me throw in some bonuses for you. Okay. I'm going to throw in over $1,000 in bonuses. First off, obviously the class, dropping that price to half price for you. One day calling banks training. This is us in a live over the shoulder, fly on the wall, hearing me call banks for 4 to 5 hours on a Wednesday. We have the next one. We usually have it the Wednesday after the class so that you're fresh and you got a great running point. If you can't make it, don't worry about it. We do record it, but you can hear what I say, see who I call, the conversations, the questions they ask. You can even ask me questions and figuring out exactly how to do this. People love this. That's normally $49 by itself. The Bauer Financial List. This is the list that we pull. It's over a $400 value. We throw that in there for you. Have that as well too. The most updated one. Okay. So you go through the class here in August, you'll have the most recent one, which is the June one, which has 1,800, I think, banks on it, and exactly all across the country. You can see bank size, their ratio size, but how much in default they have. It is a beautiful tool to use to help you find deals. I charge $1,000 an hour for consulting. I always like to have a scheduled call with my students afterwards for 30 minutes so that you make sure you're on the right path, the right direction. Some people, that's all they need. Other people are like, what's my next step? Okay, we'll go that route. But let's focus on where you need to go. Let's figure out the top 3, 4, 5 things that you need to do immediately to take the most amount of action to be successful. I want you to be successful. I don't want you to come through a class and not be successful, okay? We'll throw in the replays. If you have your spouse or business partner that want to attend, guess what? We'll throw them in for free. And then, of course, we've got an amazing Facebook group with over 900 members that are just an absolute joy to work with. They're there to ask. You can ask questions. You can network. You can get people to go look at properties for you. You can post your deals that you have under contract to sell. That's something that's worth a whole lot more than $100, but we put it down there. So once again, all these bonuses, over $1,000, I think over like $1,500 in value. Basically, all that's included for just the $49. So I'd love for you all to take advantage of this, guys, and go whatever your goal is. We talked about this in the front end, whether it's to retire, to have the money to do that, or the time and the money to retire your spouse, or to put your kids through college, or to retire your parents if you want to do that, or help them out with a variety of things. Maybe you want to travel more, and we can get back to traveling as a family or friends. I know I am looking forward to that. Maybe you just want to upgrade your crib or your toys and make money having some fun. It all takes capital, everybody. It all takes money. And every bit of that starts in the note business. Every bit of debt starts everything out. And you can tap into that and either be on the receiving end of that capital or you can be on the giving end. And most of you are on the giving end of it right now. You need to be on the receiving end. Let me show you how to do that. So you can go to noteweekend.com, get signed up there, noteweekend.com. If you sign up now, tonight, we'll get a link out to you first thing in the morning with the replays, the last one you can watch, and some of the bonuses so you can start tapping that stuff and really starting to learn now so you're ready to roll when the class rolls around here in just a few days. But love for you guys to be part of it. If there's any questions, I highly encourage you to ask them, whether it's here live or you're watching this on the replay, feel free to. So Juan asked the question. He goes, is it 9 a.m. Central? Yes, we start at 9 a.m. Central. We'll go till 5, 6, 7 o'clock at night. It says 9 to 3. That's just in case there's no questions to ask for the most part. But sometimes we end up early. Sometimes we run a little bit long, which is totally fine. We take about a 30-minute break in the middle of the morning, 30-minute break for lunch, and then a 30-minute break in the afternoon. And it's basically back to back to back to back. We record it live, and it's basically about 14 different sections for you to be able to tap into. Okay? So get signed up tonight, noteweekend.com. Ladies and gentlemen, love for you to be a part of the class. Love for you to be part of the 1,000 that I think are really going to make a big difference going into next year. So Go out, take some action, everybody, and we'll see you all at the top. Thanks for being a part of it.